Hello everyone, welcome to Thailand's monthly strategies and outlook for the month of June. For the month of June, actually, I think the market outlook seems not change much from the month of May, as it's still the bearish sentiments remains and the sideways down is the picture we expected for this month. That's because the factors surroundings have not changed much. Uh, let's go to the detail of the main factor for the month of June. From the external fronts, we think the Greek debt drama would continue to be a major wild card that bring more volatility to list the market. Throughout the month of June, the Greeks will face several repayments totaling 1.5 billion euro to the International Monetary Fund or IMF, even though it is expected that Athens will finally reach a cash for reform deals with its international creditors. More challenges still lie ahead for Greece as more needs to be done for Greek government, which is in danger for running out of money to keep itself afloat to avoid an exit from the Eurozone. While its softening stance against austerity measures may also raise the risk of provoking public outcry and protest. And another major factor from external fronts is the timing of the U.S. interest rate lift-off. On the FOMC meetings during 16 to 17 June, we think Fed is no rush to raise the interest rates, and we think it's more likely to see the rates to be lifted in late of the third quarter at the soonest or by the end of this year instead. From the internal front, the Bank of Thailand's policy meetings on June 10th will be the main economic events to watch in this month. Although we see slim chance that the central bank will slash its policy interest rate for the third straight meetings, the door is still left open for a surprise third consecutive rate cut in a bid to weaken the baht to aid exporters. Another factor is the progress on the cabinet's approval of the government's mega infrastructure project, as especially after the transport minister has given a timetable to put the project before the cabinet for approval in June and July this year, before bids will be called in September onwards. So this is the two major factors from internal front that people will keep an eye on. However, the political factors with some things we cannot believe of in our minds because we still think that it have a chance that the political heat may rise during the process of drafting a new construction and holding a national referendum on the new draft charter. So people may just keep a close watch on the political issue as well. So for the Thai stock market outlook in June, despite a hope of more QE measures from Europe or further monetary easing from the Bank of Thailand's historical data, however, suggests that the market only briefly react positively to the news. The room for upside therefore remain limited for Thai stocks. On the contrary, volatility triggered by the same old negative headwinds surrounding the market may slam Thai stock to the downside. So we foresee the key support levels less at 1460 to 1480 points, while the top side would be limited to 1520 to 1540 points. So for short-term investment strategies, the equity exposure should be limited to 25% of the portfolio as long as the index is sustainable to decisively break back above a key psychological level of 1,500 points. The major theme for speculating after standing above 1,500 points would stick to the weaker baht themes. So the focus should be on tourism or export sectors, as both are expected to be the prime beneficiary of a weaker baht. For medium to long-term investment strategy, the key support level of 1,460 points should be used as an entry point with direct play on government infrastructure spending in focus. So we like building material, construction services, and banking sectors. For this month, our stock picks that will be added and increase the weight to our model portfolio are Chor Gan Chang, Siam Future Development, and Tourism Thai Agency that our analyst will give you more detail on each stock.
The first stock is CK Chor Gan Chang. The first quarter margin unusually low. CK post 66% year-on-year drop in the first quarter's non-profit as a result of exceptionally low margin as a construction at Sayaburi Dam project was put off for water diversion in preparation for the second phase construction of the project, and the margin of some projects were low during the final phase of the project. On a net profit basis, the results, however, show a 20% up year-on-year. This is because of the divestment on BMCL and BECL. The momentum of the new contract award looks set to pick up, driven by a pipeline of a new potential project to be put up for bid in the second half of the year, including the first one is additional work from 2.2 billion contract from the construction of Mae Fah Luang University Medical Center building and facility project. The second one is electric rail projects. The third one is dual track railway projects. The fourth one is motorway projects, and the last one is the second phase expansion of Suvarnabhumi Airport. Earning upcycle. In addition to the current backlog of 86 billion, there is scope for CK to win more government projects in the second half of the year, leading us to expect that the next year revenue will be much better than this year. Investment income should also improve on the benefit of the merger between BMCL and BMCL. In our view, CK is now clearly on the cusp of an earning upcycle. We let buy on the share with the target price of 31 baht per share. The second one is Siam Future Development, or SF. 98% of the lease contract at Mega Bang Na, which expire in April and May, have already been renewed. The contract renewal would boost average rental at the Mega Bang Na by 8% year-on-year in this year, and push its earnings growth above normal level from June till the end of the year. For SF own project, the operating performance has also improved. From the first one, steady addition of a new tenant, especially at Esplanade, with average occupancy rate this year expect to be better than last year. And the second one is increasing political stability, which allows SF to collect normal rents. Our forecast for this year will deliver 29 profit growth year-on-year to 903 baht by the end of this year. We recommend buy on the shares with the target price at 8.25 baht per share. The last one is TTA. TTA earning on the first quarter dropped back into a net loss of 336 million, reversing a year ago profit due chiefly to a loss from its Singapore-listed subsidiary MML, hit by lost revenue and huge dry docking expense after the dry docking of 3 large subsea vessels. In the first quarter, TTA realized a loss of up to 298 million from MML. For the second quarter, TTS is likely to return to a profitability in the second quarter, driven largely by the prospect of recovery at MML, as 3 subsea vessels, which were dry docked in first quarter, are back in service, and strong seasonality as well as positive profit momentum at new cable laying business would further contribute to the improvement. TTA is also expected to realize a profit of at least 50 million a quarter from SGFI. Due to the confluence of positive factors, including likely return in profitability at MML, the improving perspective from dry bulk shipping business due to the seasonal factors, and the strong seasonality of fertilizer business, the likelihood of narrowing loss at UMS, we believe the second half of the year the earnings are expected to perform more than the first half of the year. We recommend buy on the share with a target price at 17.220 baht.
So that is end of our meetings, and see you next month. Thank you.